if you have 50 to 100,000 or potentially more, you can move a lot quicker. You can hire the best people, build a bigger team, invest into the best softwares, invest into advertising, and through economies of scale, I believe it's easier in business to move quicker. I think the chance of succeeding is increased.
Today's topic is amazing. It's about funding. Obviously, Jack gonna go through a little bit of his story. He's a very successful entrepreneur, a serial entrepreneur, and I'm just gonna read his bio. He's a serial entrepreneur who has collectively generated over $20 million in revenue between his several online offers in the consumer credit industry. Most notably, Jack has helped 3,000 plus entrepreneurs obtain business funding through his coaching program, Credit Stacking. He has spoken on several stages across the country, featured on dozens of reputable podcasts, and has been featured in Forbes on multiple occasions. He has been an entrepreneur for 10 plus years, built and sold a tour operating travel business. That's quite different with the credit stacking. Jack, when did you sell that business?
I sold the travel business in 2016.
2016. And then you had,
Almost 10 years ago.
that was 10 years ago, and you launched
Yeah.
the credit stacking since? Or you had a couple of businesses in between?
Yeah, after the travel business, I lived in Bali, Indonesia. I was doing Airbnb arbitrage, and then COVID happened. That business got smoked. And then when COVID happened, that's when I put together some online offers. I got into drop shipping, e-commerce. I got into consulting and some coaching programs.
Wow, so you've been into a couple of different industries. Amazing.
Yes.
Very, very inspiring. And he's on a mission to help people create the financial freedom through the entrepreneurship. Personally, Jake is also an extreme sport enthusiast. He's snowboarding and skydiving, same as me, Jack. I'm a snowboarder. Been doing that since I was a little. And he's a private pilot. I didn't know that one. We recently
Yeah.
purchased a six-seater airplane. You need to show us a picture of your airplane.
It's pretty cool. Actually, my flight instructor is flying it today because I let him fly it, and he just sent me this an hour ago.
Oh, nice.
Small airplane, fits 6 people, will go about 900 nautical miles, so some decent range on it.
Oh, nice. I need to get in an airplane one day.
Yeah, it's cool.
Where is he? In US?
It's in Utah where I live.
Oh, right. Nice. That's very cool. Amazing. So, Jack, we cannot wait to hear your story and how we can help our members. We to give you a bit of idea. So, everyone here has some sort of like AI-driven business, and some people also they're just using AI to grow their own business. So we have like a different range. Some people are beginners, some people are a bit more advanced. We even have 7, 8, or 9-figure entrepreneurs in this group too. So a bit of a mix.
Perfect.
Here we go.
Cool.
Stage is yours.
Okay, awesome. Well, Atena, thank you so much for having me. Really appreciate everyone else being here too. I met Atena at Ty Lopez's event in Beverly Hills maybe 2 months ago now. I joined the AIpreneurs group and been using the software. Actually, I just wrote a VSL with the software and did some fine touching yesterday. Then I shot the VSL right here yesterday. And so it
Oh,
was so helpful for
oh,
just helping me
nice.
get to that point. And like
Good.
right now, I've been traveling for the last couple weeks. I'm on a 7 week Europe trip. And then I'm actually going right back to the States to go to Ty Lopez's next event in Virginia at his farm. But yeah, so I'm in Serbia right now. I had a full day already. It was pouring rain for the first little bit of it. And I'm working on getting a dual passport out here. And so I was just visiting some of my long lost cousins that I've never met before. But I have a super badass masterclass to go through with you guys. I started as an entrepreneur about 10 years ago, and when I got started, it was even after I studied business at University of Washington, studied business, and I realized they didn't teach in my opinion, the two most important things in business, or two of the most important things: tax strategy and how to actually fund businesses. I was thinking, how do you go to school for business and they don't teach you how to fund businesses? So when I started, I only knew how to self-fund businesses. And then that was very slow growth for me year over year. On the second business venture, I learned how to bring in an equity partner. I gave them controlling position in the company. They brought the money. It turned out to be a horrible mistake for me, and I had to buy them out a few months later. I then learned about how to fund businesses with loans where I was paying interest. That was in the travel business, and it did help us gain market share to then get acquired from our competitor. So that was a big aha moment to me, where we could move a lot quicker in business if we had access to more money. But at the end of the day, we were paying interest. On the next business venture, that's when I started to learn about this amazing product, these 0% interest business credit cards, which is, in my opinion, the easiest and best way to access between $100,000 and $250,000 of capital that comes at 0% interest for the first 12 months. You can do this with no tax returns, no proof of income. All you need to have is a good personal credit score. And the business can be brand new. If you have 6 months or 12 months of age on the business entity, even if it's not making any money yet, you don't have collateral, you don't have tax returns, you can still get access to this type of money. Specifically for people who have a social security number or an ITIN number. If anyone's foreign and doesn't have a social security number in the States, if you have an ITIN number, ITIN, you can build US credit on an ITIN and then get access to this type of credit. And so it completely blew my mind when I learned about the fact that people, myself, and I got approved for $500,000 in just the first year. I cracked the code. I got in touch with some high-level bankers who gave me inside information from the underwriters. So I understood exactly what the underwriters wanted to see on a personal credit report, the amount of accounts, the size of the limits on the personal cards. I understood how to build strategic banking relationships with the banks that actually matter. Some banks it doesn't matter to build a relationship with, and some banks it's crucial to build that relationship with. And we only have so much time. So I think it's very important to be intentional about how we're not only building our personal credit, so it's attractive, so it's easy to get approved for business funding, but also intentional about where we're spending our time to build relationships with these key banks. Okay, so let me pull up my screen. If I could share my, oh, there we go. Perfect, Atena, thank you. Okay, perfect. Let's go to this. I mean, Atena gave me a pretty awesome intro. I've spoken on stage across the country. I have a book on Amazon, been featured in Forbes. I have a coaching program where I've been teaching 3,000 people about business credit over the last 5 years now. These are the 4 different ways I talked about funding businesses, and it took me 7 years as an entrepreneur to learn about 0% interest business credit. And at that point, I was like, how am I just learning this? I'm 7 years into entrepreneurship. I went to business school and I'm now just learning this. And so I became fascinated with it. I started to just learn as much as I possibly can. I got in touch with these bankers. I really just learned as much as possible. And I started testing different approaches at the different banks on myself and some of my close friends. And I started to get really, really good results after some trial and error. And then I realized you can get approved for these couple $100,000 at 0% for the first 12 to 18 months. And then what I did with the money at that time in 2020, I dumped all the money that I got approved for into e-commerce stores. I was drop shipping on Amazon. I was drop shipping on Walmart as well. And very quickly, because I had access to so much money, I was able to grow those stores to a pretty good level where they were making millions of dollars in revenue, which was pretty epic. And so when I realized that, I then wanted to help other people get access to this type of credit because it's a resource I didn't have when I started in business. So then I started the coaching program. I've taught over 3,000 people over the last 5 years. So when it comes to building a nice profile, it's much more than just a score. Okay. The majority of what the underwriters are looking for is what that personal credit profile looks like. Like I said, no tax returns, no financials. Business credit scores can help, but the personal credit profile is the most important. Second most important is that relationship with the bank, which we'll get into so you can maximize your efforts. And I want to stress this big time. The banks will become your business partner. It's so easy. Like with the right framework that I'm going to go through, it becomes so easy to get access to hundreds of thousands of dollars that you can use to scale your business, your online service-based business, your investment portfolio, your real estate businesses, et cetera. If it works within, that 0% for 12 months. I also have some strategies where you can use a business line of credit to pay off the business credit cards and then kind of repeat that cycle over and over. So you can actually get 0% for multiple years, which is really incredible. Apparently my Canva subscription expired. It's funny. But anyways, I'm talking about getting hundreds of thousands of dollars at 0%, which is just incredible. So we talked about this. You don't need age on the business. You don't need revenue, all those things. So I want to teach you guys in this presentation how to get access to easily over $100,000 of 0% interest business credit so you can scale your business to new heights. And I have found that if you have more money, if you have access to more money, the chance of you succeeding in the business increases. If you're bootstrapping on the business, you only have 5,000, 10,000, you're going to be moving most likely very slow. At least I moved very slow when I self-funded a business. If you have 50 to 100,000 or potentially more, you can move a lot quicker. You can hire the best people, build a bigger team, invest into the best softwares, invest into advertising, and through economies of scale, I believe it's easier in business to move quicker. I think the chance of succeeding is increased. So the 3 pillars we're going to go through is optimizing that personal credit profile, moving then to relationship development, and then actually credit stacking, submitting the applications and getting those approvals. So why is this important right now? There's really big limits. The credit industry goes up and down. Sometimes it's a little bit tighter. Sometimes it's a little bit looser. Right now, it's a little bit tighter going into halfway through 2025. With it's been a little bit better, but the beginning of the year there was a little bit less certainty, but still very possible to get massive limits on these cards. This is $75,000 on one card. This guy got 2 of these $75,000 cards at Chase for a total of $150,000 just at Chase. So at different banks, you can sometimes get 2 cards per bank. So you get 2 cards at Chase, 2 cards at American Express. You can actually get up to 5 cards at Bank of America, etc. So I have a different approach on a per card and per bank basis. So I'm going to skip forward a couple. There's definitely massive sign-up bonuses that come with these cards, and you can use those points and miles to do luxury travel all around the world, which is just an incredible byproduct of credit. But when it comes to the optimization of your profile, the number of accounts matters, the collective personal credit limits matters, the type of accounts, the number of hard inquiries, and the number of on-time payments, okay? So you want to be thinking about credit for a long period of time, because you can't just build strong credit in 2 to 3 months. This is generally something you want to be building over several years. And maybe you're already in a stronger position, but maybe you have a thin profile. So for example, a thin profile would be someone, maybe they only have 2 personal credit cards. Maybe their collective limits on those personal credit cards is only $10,000. That's a rather thin profile. A stronger profile would be someone who maybe has 5 personal credit cards, maybe an auto loan, maybe a student loan, a mortgage, maybe an old personal loan. So you have like 9 total accounts. And the collective limits on those personal credit cards is between 40,000 and 80,000. That's the strongest range of personal credit limits is between 40 and 80,000. So if you find yourself with only 10 or 15,000 of collective personal credit limits, you would want to apply for a high limit personal credit card, which I'll get to, so you can build up those limits. If you guys are not already checking your credit profile, I have a feeling you guys are pretty advanced, but you should be checking your credit profile. I like to do that on MyScoreIQ or Experian.com. You pay the $30 a month. You can look at your credit profile. I think a lot of you probably do that already. In terms of hard inquiries, this is a very important one. So if you have too many hard inquiries, the banks are going to deny you on future applications. So, and every time you submit an application, you get a hard inquiry, right? So if you have more than 2 hard inquiries in the last 6 months on either of the bureaus, you then start to increase the chance of getting denied for too many hard inquiries, okay? And so there's many different strategies on how to actually get hard inquiries removed from your credit profile. We teach strategies about this. There's also credit repair professionals who can do a hard inquiry sweep for you. So if you look at your profile, you're like, dang, I have 7 hard inquiries in the last 6 months. That's going to make it very difficult to get approved for anything, any other applications in the short term, unless those hard inquiries get older. Okay, so no more than 2 hard inquiries in the last 6 months on each of the 3 bureaus. And again, if you have a bunch, you can get approved. I'm going to mute James. You can get approved. Maybe Atena, mute James, please. You can get those inquiries removed. Average age on your profile, you want that to be at least 2 years of average age. You need to get added as an authorized user to someone else's personal credit card. You can piggyback on their age and it'll increase the age of your profile. They really appreciate having better age. I'm going to skip this one. When it comes down to credit mix, the lenders love to see a diversity in your credit mix. Okay, so like having some personal credit cards, having an auto loan. If you have a mortgage, that looks really good. If you have a personal loan or two, if you have diversity, this really, really helps. And if you don't have diversity, one thing that I did that helped me go from an 800 credit score to an 826 is getting a pledge loan. So basically how a pledge loan works, and you can do this with Navy Federal and also Pentagon Federal Credit Union. Basically what I did is I put $10,000 into a savings account at Navy Federal, and I borrowed $10,000 against my $10,000. And then I paid off 95% of that loan. So now I only have $500 tied up, and I have this $10,000, 95% paid off loan on my credit. So now that $10,000 loan looks good on my profile, and it's 95% paid off. And I didn't have to spend $10,000. I just put it in the savings account. I borrowed against it, and then I paid off 95% of it. So it only held up 500 of my dollars. And that boosted me again from an 800 to an 826. And it diversified my credit mix. So diversity in the credit mix can go a long way, even though it's only 10% of your score. When it comes to the personal credit cards you have, there's a lot of people that only have 2 credit cards. And I don't blame them, because maybe you don't know that getting more credit card accounts will actually increase your age or increase your strength of the profile over time. It'll increase your score, increase the attractiveness to make it easier to get approved for these high limit business credit cards. So you want to have at least 3 personal credit cards. But the thing about getting personal credit cards is you don't want to apply for too many too quickly. The most I would ever do is 2 in a 6-month period. If you start to do 3 or 4 in a 6-month period and then apply for business credit cards, you're for sure going to get denied for the reason of too many recently opened credit card accounts. So you want to build up those primary revolving accounts over time, over the years, and that's going to build a much stronger personal credit profile. In terms of collective limits, I mentioned this already, but it's very important. People who have higher collective credit limits has a stronger profile. So that $40,000 to $80,000 of personal credit collectively is that range you want to be in. And I've actually seen people get denied for high limit business credit cards if they have over 90 or over $100,000 of personal credit limits. In that scenario, I would actually recommend to manually reduce some of your limits, so it's in that like $40,000 to $90,000 range. And another thing that's important here is the more tier 1 accounts, the better. Okay, so the tier 1 banks are banks like Bank of America, Citi, Wells Fargo, and Chase. If you have personal credit cards at those tier 1 banks, they look better on your credit profile than if you had tier 2 or tier 3 accounts, which is smaller banks, generally regional banks and credit unions, or even store or retail card accounts. You really want to stay away from personal credit cards at credit unions, smaller banks, regional banks, and definitely retail cards like Sephora, Victoria's Secret, Cabela's, blah, blah, blah. So if you are looking to build up your personal credit cards, you want to do that with tier 1 banks. Specifically, I would leave Citi out, but specifically Wells Fargo, Chase, and Bank of America. So they're tier 1, and those 3 banks actually have 0% cards. So when you get a personal credit card with one of those 3 banks, you're actually building a credit relationship with those banks, which is a very, very good thing. If you build a relationship with Citi, it's not as valuable because Citi doesn't have 0% cards. So we always want to be building relationships with banks who have the credit products that we want. And if you want 0% business credit cards, you want to be building a relationship with the bank who has those cards. Another thing about increasing your collective limits, these Amex cards right here, they're actually not credit cards. They're called charge cards because these credit cards that are X'd, they don't have a limit. So if you have one of these personal credit cards or charge cards, they don't show a limit on your credit report, okay? And you want to be building up your collective limits. So personal gold, Amex, personal platinum, I really don't recommend until later on in your journey in credit. But these are some of my favorite high limit personal credit cards. These are cards that I see generally giving high limits on. The Built card is you can pay your rent and your mortgage on and actually earn points when paying your mortgage or paying your rent payment with no credit card fee, and you earn 1 point per dollar spent, which is pretty incredible. If your mortgage is $3,000 a month, whatever it is, you're getting 3,000 points a month, which adds up over a year, and you can do amazing things with Built points. And again, that's issued by Wells Fargo, which is a really good bank to build that credit relationship with. The Chase Freedom Unlimited, the Chase Sapphire Preferred, or the Sapphire Reserve are three really good Chase cards right there. I added the City here because I see good limits on it, but really the other four cards I just mentioned would be my preferred high limit personal credit cards. So let me break down a perfect 850 credit score. And I've seen this actually done with someone who had only, I think it was 14 open accounts more recently, but this is the one with 20 open accounts. Okay, so 850 score. This guy had 16 primary credit cards. You know, so you got to get 16 credit cards. You don't have to, but he did over several years. One authorized user, 2 installment loans, 1 mortgage, and his average credit age was 6 years with primary credit limits of $71,000. Okay. Once you get to over an 800 credit score, you get much better interest rates, of course, on auto loans, on mortgages. It becomes much better and easier and cheaper to get access to money. And if you look at a mortgage calculator and you calculate the difference of getting a 7% interest rate and a 9% interest rate, that's a huge amount of savings when you can get the best possible rate on a mortgage, best possible rate on an auto loan, on other loans, etc. So you want to get to that 800 plus, ideally 850, because then it pretty much becomes unstoppable on what you can get approved for. So a couple mistakes that I see happen all the time is when people apply for things prematurely. Maybe they're not monitoring their credit report. Maybe they're not paying their utilization down on their other cards before applying for something. So back to the intentionality and just being very strategic about every application you're submitting. You don't just want to look at an application that you get on a flight and you're like, oh, I want to get this card, I'll apply right now. No, you want to look at your credit and make sure that you're in a good position to apply where you have the best possible chance of getting approved for that account. I mentioned the second one before, but a big mistake I see people make is applying for more than 2 personal credit cards in a 6-month time frame. Unfortunately, if someone applies for 4 personal credit cards and then tries to apply for a business credit card, they're for sure going to get denied because there's just too many recently opened accounts. And one thing that actually should have said at the beginning, one of the other things that blew my mind about business credit cards, and maybe you guys are familiar and heard about this concept, but business credit cards, they don't report to your personal credit profile. So that means the account, the business account, is not showing up on your personal credit report. That doesn't mean you're not liable for the money, but why that's significant is you can max out the business credit cards and it doesn't show up the utilization on your personal credit report. As you may know, if you max out a personal credit card, your score is going to be tanked down. If you max out a business credit card, that utilization is not on your personal report, so the utilization does not affect your score. Unless you start defaulting on the debt, then it could negatively affect your score. So the third one, I briefly mentioned this as well, just not focusing on tier 1 banks. That's a mistake I see people make. When you apply for personal credit cards, you want to be doing that with tier 1 banks. The only exception is American Express. So my 4 top favorite banks is Chase, Bank of America, Wells Fargo, and American Express. You want to be building relationships with those banks. Just briefly on this one, maximizing fundability. If you guys already have online businesses, that's generally a low risk business. And basically, there's something called an NAICS code, which classifies the industry risk that you're in. And so if you had a brick and mortar business, then that's a little bit higher risk than someone who has an online business. I think probably most of you guys have online businesses. So that is naturally a lower risk business, a lower risk nature of business. But you just want to make sure that NAICS code is accurate on your business checking accounts. So when you go into Chase or Bank of America to open a business checking account, what I like to do beforehand is do research on this NAICS code and give that code to the banker to put on the bank account just to make sure it's accurate. Because when the banker asks you what your business does, they're basically trying to figure out what code to give you, and they possibly could make a mistake. And so I like to do the research and tell them what the code is just to make sure that it's as low risk as possible. And one example I like to give is I had a coaching student and he had a brick and mortar gym, and he also had part of his business as an online consulting where he did online fitness plans, online coaching, etc. So that would be like more so consulting, which is way less risk than a brick and mortar gym. So he went with the NAICS code that reflected that lower risk portion of his business, which was very valuable to him. Because if you have a high risk business code, it's going to set yourself up for denials. I'm going to skip these two. Let's move on to relationship building. So touch on this a bit. These are really, and this is the rank I would put these in, specifically the first two. So when I talk about banking relationships, I'm talking about where to do your banking. Okay, where does your business have a bank account? Some people do online bank accounts with like fintech banks. I don't really recommend that. I would highly recommend to have a business checking account at both Bank of America and Chase. So if Bank of America doesn't see revenue, they're not going to approve you for a business credit card. A lot of the other banks, you can easily get approved for their 0% cards without showing any revenue. Bank of America is kind of an exception there. They need to see that revenue in the bank account. So I always recommend to have a bank account at Bank of America and show them that revenue. At number two would be Chase Bank for sure. Having a business checking account is a requirement to getting approved for one of their $50,000 or $75,000 $0% cards. So you need to have a business checking account at Chase. Actually, for the time being, I would actually not focus on US Bank. I would just focus on those top two. Wells Fargo is actually what I would put at number three. The reason I have these X'd on the side is because these banks, Citi does not have a 0% card. So in my opinion, not worth it to build a relationship with Citi. Capital One does have a business credit card, but their business credit card reports to the personal credit profile. So it completely defeats the purpose of a business credit card because you want it to be not reporting to your credit profile so you can max the card out and it doesn't negatively affect your score. Discover, same thing. They have a business credit card, but it reports to your personal profile, defeats the purpose. When it comes to credit relationships, so we can build a relationship through banking and we can build a relationship through credit cards. Okay, so American Express, the best, easiest way to build a relationship with American Express is through their credit cards. So either through one of their personal credit cards, or you can easily get the business gold card. Because this is a charge card, it's very easy to get approved for this card, and you would want to spend on this card for the first 1 to 3 months and then possibly apply for their 0% business credit cards. There's 2 of them. And because you built that credit relationship for 1 to 3 months, they're going to trust you a lot more and give you a much higher limit on their 0% card. So you can put that money into your business and take it to new heights. At Chase, I would build that credit relationship on personal credit cards. The people who I see get approved for 75K cards at Chase, they generally have a Chase personal credit card. And Chase personal credit cards are also the best rewards. You get like 3x on dining on the Chase Sapphire Reserve. You get a ton of rewards on travel expenses. They have really amazing personal credit cards, and you want to build that trust with Chase before applying for their 0% cards. And this is not something you have to do at all of the banks. But at these three banks specifically, you want to build that credit relationship before getting their 0% cards if you want to maximize your efforts. So here are some easy ways to damage relationships. And I see people make these simple mistakes all the time. If you have an overdraft on your checking account at Chase, if it goes negative, even like $2, it can happen by mistake, right? If that happens, it's very difficult to get approved for a business credit card within 6 months after that overdraft happens, because you just showed Chase that your bank account just went negative. You never want to go negative on your bank accounts, like never. Is insufficient funds on credit card payments. I've had this happen to myself, and it set me back at American Express for 6 months. I had an auto payment that was set for the full balance, and I thought it was set on the minimum only. So it tried to pull like a 30 grand payment from my bank account that I wasn't expecting. I thought it was gonna be like 300, and I didn't have 30 grand in the account when it tried to pull. And so it was an insufficient funds flag. And that just showed American Express that I didn't have the money in my bank account, and they do not like to see that, especially if you schedule a payment. And if you schedule a payment from a different, like if you schedule a payment on an Amex credit card to a Chase business checking account, that can take a couple days for that payment to hit. So if you schedule the payment and then in the next 2 days you forget you scheduled it and you move the money out, and then there's not the money in the account, that's going to be a very bad time for yourself and set yourself back. Internal late payments. If you pay something 10 days late, you won't get a late payment on your credit report. You will if it's 30 days late, but you still get an internal late payment, and the banks do not like to see that. So set up auto pay on all your accounts, at least on the minimum, for sure. So next, step 3 is going to be credit stacking, maximizing our efforts for the highest approvals and limits. We're going to talk about what to apply for, how to apply for them, when to apply for them, what cadence, and also how to access funding in different states. Because when it comes to different states, the state your business is registered in will show you what access to funding you have. Like Florida, for example, has a lot more regional banks that have 0% cards, like Citizens Bank and Truist, which in Washington state or Utah, we don't, those states, those states don't have Citizens and Truist. So the state where you're registered in determines what access to funding that you have. And a lot of people just don't know the options they have available to them in any specific state. Maybe they know Chase, Bank of America, American Express, but there's a lot of other banks in all the states. And if you know all of those banks, there's generally 6 to 10 different credit cards you can apply for. And if you apply for all 6 to 10 of these cards, that's how you get that 200 to 250K approved in a very short period of time. I talked about avoid Capital One business card, avoid Discover business card. When it comes to applying, there's one bank specifically that you want to apply through a business relationship manager. This is a high-level banker that generally don't hang out in the branches, but the one bank where it's really important to have a relationship manager is going to be Chase Bank. A relationship manager dramatically increases the chance of getting approved for that 50 or 75K card. I've seen it done with online applications, but it's just more difficult to do. So if you have a relationship manager, if you can get in touch with one, you can go into the branch and say, hey, I want to get in touch with a relationship manager. It is possible to do. Generally, they need to see either 100 grand in the bank account, or if the business does over $1 million in revenue. There's some ways around that, and sometimes you can convince the relationship manager to help you out anyways. But these are high-level bankers that help people get these high-limit cards. So you want to get access to these relationship managers, at least for sure at Chase. So when it comes to the next step, we're going to be thinking about hard inquiries. And and I mentioned, if you have too many hard inquiries, you're going to start getting denials. Okay. So if you already have one hard inquiry on Experian and the next 3 banks are going to pull from Experian, then you're going to be at 2 hard inquiries, 3, and then 4. Then you're going to start getting denied if the banks continue to pull at Experian. So one of the more advanced strategies is, as you're applying for business credit cards, you can then actually remove those hard inquiries from your profile, so you won't get denied for too many hard inquiries. And so we like to understand what bureau each bank is going to pull from based on the state that you're registered in. So like, for example, Bank of America generally pulls Experian, but sometimes they pull TransUnion based on the state that you live in. Chase as well, generally Experian, American Express, generally Experian, et cetera. And so when we look at like a funding plan for people, we look at how many hard inquiries do they have, what state do they live in, and what bureau is each bank going to pull from. And so another example is if you have 6 inquiries on Experian right now in the last 6 months, you do not want a bank to pull from Experian. But if you have 0 on TransUnion and 0 on Equifax, those are the 3 bureaus, then you can go apply for a bank that will pull from Equifax or TransUnion because you have no hard inquiries there. So I would freeze Experian because you do not want a bank to pull Experian in the scenario you have 6 hard inquiries. You want them to pull from TransUnion or Equifax. So generally you would be looking at not Chase, not Bank of America, but maybe like a Citizens Bank or a Truist Bank. So they're going to pull from not Experian in that example. So that's why I put this Tetris there. All the inquiries are like little Tetris pieces. It's a puzzle we put together based on those hard inquiries. So if you are in a state like California and you want to get access into a state like Florida, one thing you can do is do a foreign filing fee to register your business into a different state. That's going to give you access into the other states so you can tap into some of those regional banks. I did this exactly at a Washington entity that I did a foreign filing into Pennsylvania, and that got me access to KeyBank, M&T Bank, Truist Bank, and PNC Bank as well, banks that I didn't have access to in Washington State. So I registered my business in Pennsylvania, and then I got access to more banks because I was registered in the state where that bank had a footprint. So that's how you broaden your banking reach. Some of the best states to be filed in is Florida, the Carolinas, Virginia, basically any bank that has a Citizens Bank in it, as well as a Truist Bank. Those are generally the better states to be registered in because it just gives you access to more funding. So like Truist, for example, they have 2 different business credit cards and a business line of credit that you can get approved. So you can get $25K on the first business credit card, $25K on the second, and then up to a $50,000 business line of credit, all without showing any tax returns, proof of income, or bank statements. So that's like $100,000 you can get approved for just at Truist alone. And you can do similar things at Citizens Bank. When it comes to having multiple entities, and I recommend every person to have 2 entities. If you have 2 entities, you won't double the amount of funding you'll get, but you'll definitely increase it maybe by 50%. And if you have 2 business entities, it just gives you more options and more flexibility to get more funding when you need. And maybe you don't need max funding of $200,000 now, but maybe you'll want some more funding in 12 months. So if you do a funding round on your first entity, and then maybe in 12 months you need some more funding, well, having that second entity that's just been sitting there getting some age on it, because getting age on it will definitely help, is going to be beneficial to have 2 entities versus 1. And I'm talking about just like having 2 LLCs. One can be completely like you're not using it, it's just sitting in the background gaining some age. So if you already have 2 and you're wondering, okay, which entity should I get the funding on? And because you're personally guaranteeing the business funding you're getting approved for, the banks don't exactly care which business you're spending the money on. So my approach on that is, even if I need the funding for business B, but entity A is the stronger one in the nature of business, it's less risky. The age of business 1 is older, and I have a stronger banking relationship with business 1. Well, then I'll just get the business credit cards for business 1. And if I need to use them for business 2, I can totally do that. So that's how I prioritize the strongest entity to get the most amount of funding. And then if you have, this is actually my parents, it's funny I added them here, but if you have 2 business partners, you can double up your funding. And so they were business partners on the same entity. I helped them get approved. I think it was like $250K collectively. And then they used that capital to put as a down payment on a house in Mexico, which was a great dealio for them. But if you have two partners, you can double up the funding because each partner is personally guaranteeing what they're getting approved for. So just because partner one gets 100K on the business doesn't mean partner two can't get 100K. Because they're looking at the social security number. Having two partners can literally double the amount of collective funding that you get access to, which is incredible. So if you have two entities and you happen to have a partner, that just increases the total amount of funding you would be eligible for. Okay, this is a really big concept. This is about credit limit transfers on a bank by bank basis. So Chase, American Express, and Bank of America, you can move limits between business credit cards. And here's why it's a really big deal. So say, for example, you get a $50,000 Chase business credit card. You spend the 50 grand, 0% for 12 months, and then you're able to pay down that 50 grand by the end of that introductory period. And then you get approved for another Chase business credit card. Say this second card is only a $5,000 approval on this Chase card. Well, because we can move limits and we just opened a new 0% card, we can move that $50,000 limit from the old card over to this brand new card. Now we have $55,000 on this now brand new 0% card for another 12 months. Okay. And then we can do that same thing again. So we move the old limit to the new card and we have 12 more months of 0%. Okay. We can do that same thing at American Express. If you have a $30,000 American Express card, you pay it down at the end of the 0% period. You apply for another Amex card, say it's 20,000. You can move that 30,000 old limit to the new card. Now you have $50,000 0% at American Express. You can do the same thing at Bank of America. At other banks, it's not like that. So US Bank, Truist, Citizens, the first three that I mentioned are the only banks you can do this with. So I would never forfeit limits at Chase, American Express, Bank of America. Never close the only time you would close a business card at one of those three banks is if you're moving all of the available credit to a new card. Then that closes the old account, but it doesn't matter because you didn't forfeit any of the limits. So over time, you're going to be building more and more collective limits on these business credit cards at these three banks: Chase, American Express, Bank of America. So like Chase, I'm getting very close to that threshold, which I actually haven't said. The threshold is $150,000 of business funding at Chase you can get approved for without showing tax returns. If you get approved for more than 150, then you have to start showing tax returns. So even if I get another 0% card at Chase, I can move all of my available credit at Chase, move it to the new card. Boom. I have a huge amount of 0% funding for another 12 months. At American Express, I think I'm up at like 60,000 in total funding there. Bank of America, I think I have about 80,000. And so if I just get a brand new Bank of America card, it's only a $5,000 card, I can move that 80,000 to this new card. And so I'm just rolling it over year after year. So to have access to capital like that, so much more is possible. If there's a good real estate deal in front of me, fantastic. I can take advantage of it, depending on what kind of deal it is. If it's a fix and flip where I'm going to be able to pay off the interest, fantastic. If there's an investment opportunity, it's incredible to have access to this type of money when you have good opportunities in front of you. And actually, let me follow up this strategy with an advanced strategy. So maybe you're thinking, this whole thing I've just been talking about. You have this $50,000 Chase card. You get to the end of the 12 months and you can't pay the $50,000 down, which sometimes happens. Maybe you put it into a deal, put it into your business, and you didn't generate enough money to pay off the balance before the 0% runs out. And this is where we start talking about business lines of credit. So business lines of credit they basically act as a bank account that you can just pull money from when you want to use it. Like a credit card, you can't just like pull money off it. You have to run it through a merchant processor. A business line of credit shows up just as like a bank account, and you can just pull money and then you pay interest when you're borrowing from the business line of credit. Generally, you're paying about 10% APR on a business line of credit in 2025. To get approved for a business line of credit, there's several options where you can get approved with no docs is what it's called, no tax returns, etc., where you can get 50K at this bank, 50K at this bank, 50K at another bank. So you can stack up these no doc business lines of credit. But your business has to be at least 2 years old. So that's another reason why you should have a second LLC that's aging in the background. So when both of your entities are over 2 years, you just have access to more money, both on business credit cards and on business lines of credit. So now let me loop back to the strategy that I mentioned. So if you have that $50,000 credit card that's maxed out at Chase, you get to the end of the 12 months, you can't pay it down, but you are savvy enough to previously apply for a business line of credit. So you have access to this 50,000 business line of credit. You can pull from that business line of credit, pay down the Chase card. Now it's at zero and the balance is on the business line of credit. Now we can apply for a brand new Chase business credit card and say again, we only get $5,000 approved. Well, we can move that $50,000 of available credit at Chase because we just paid it down. So we have available credit of 50K, move that to the brand new 0% card at Chase. Now we have $55,000, 0% for 12 months. The balance is on the business line of credit. So now you can either pay the 10% interest if you keep it there, or a more advanced strategy is actually where we can liquidate the business credit card, where we run it through a merchant processor to convert the credit into cash for a 3% fee. Now we have the money in our bank account. Now we pay off the business line of credit. So now the balance is on that business credit card. That's 0% for another 12 months. So that just gave yourself another year of borrowing that $50,000. Does that make sense, guys? Drop a 1 in the chat if that concept made sense. And let me bring up the chat. And if it doesn't, I can say it again because it's a little bit more advanced for sure. Here's the chat. Okay, we got a few 1s. Cool. It's really incredible when you can snap your fingers, you have access to money, and with that exact strategy, you have access to 0% for literally several years. You can do that 5 years in a row. I wouldn't use 0% business credit cards into something where I needed to hold the money for 5 years. You totally can do that. It's just a little bit of hoops you got to jump through. But if it's like a 1 to 2 year investment on a real estate deal or into your business where you could think you can make the money back in 6 months, which most people do, then that's fantastic. One person mentioned, please repeat in a different perspective and share replay as most things are an eye opener. So again, you have this balance on a business credit card, 50,000. If you were savage enough to get a business line of credit at a bank like Wells Fargo, where you can get a business line of credit where you don't have to show tax returns, boom, perfect. You have a $50,000 business line of credit at Wells Fargo. You borrow from the business line of credit. Now you have cash in your bank account. Now you pay off that business credit card at Chase, so the balance is 0. Then you can apply for another Chase business credit card and say you get only 5K approved. Well, you can move that available credit on that Chase card you just paid down over to the new card. Now you have 12 months of 0% on 55K. And then we can liquidate that credit card into cash by running it through a merchant processor. And then that money is in your bank account. Then we pay off the business line of credit. So the balance now is on the business credit card, which again is 0% for another 12 months, which is incredible. So that's how you roll it over year after year. I think that's pretty much it. I know we have like another 10 minutes for questions, etc. Yeah, hopefully you guys got some good value from that presentation. I could talk about this for hours. I mean, we have some very advanced strategies, but that was like kind of all how I boil all of it down into an hour presentation. And then I have 2 different ways to work with me if anyone's interested in, but it's mainly through a done-for-you funding service where we actually submit applications for people. We help them optimize their credit, hold their hand through the whole process, connect them with our relationship managers, et cetera. So if anyone is interested, I'll drop that link in the chat, but let's go to a Q&A to make sure everyone's questions are well answered.
Thank you so much, Jack. That was amazing. Well done.
Awesome.
It's
Thank you. Sometimes it's a little bit fast and a little bit technical, but I only have 50 minutes. And so there's a lot to fit in there.
No, that was amazing. Okay, so question time. So I'm gonna go back to the chat. There was a couple of questions at the beginning. So this is only for US, right?
It's for people who have a social security number or an ITIN number. So technically, you can have a social if you've worked in the United States, and if you have access to getting an ITIN number. I think residents can get an ITIN without being a citizen, but you do need to build credit on a social security number or an ITIN number. If you don't have those, then it would not be accessible. However, if you're in a country like Canada or the UK, there's not as many of these amazing 0% interest offers, but some of the same principles of building relationships with the right bank, building your credit profile in a specific way that's attractive to the underwriters, a lot of those principles would be similar, but the banking options would be different in non-US states, US countries.
Perfect. Dan, did you have any question? You can unmute
Yeah,
yourself.
yeah, thank you. I did have a quick question for you. This is great. This is awesome. I appreciate this. So, if I have an LLC currently with a house that I've had for about, I don't know, maybe 4 or 5 years, right around there, and it's a rental property, it's a quadplex. So, I have decent revenue coming in, but I want to apply for a business loan and use that money for a new business that I started, an AI business, consulting. Would I be able to do that and not, look weird to the government or anyone?
So so getting access to 0% cards is your question. You have the
Yes.
real estate and you have a second entity for the AI business.
Yeah. Well, I have three different LLCs. I'm in Colorado, so I have three different
Okay.
LLCs. One for a property, a quadplex, one for a triplex, and then one for my consulting business. So my consulting business I just started not that long ago, so I don't have a ton of revenue coming in. But my other two entities, one has been around for about a year, and the other one's about 5 years.
Okay. So in general, a real estate entity is a little bit higher risk unless
Okay.
it's categorized as property management. So I'm not sure if you have
Mhm.
a management LLC by chance, but if it's a
No.
holding LLC for the property,
Yeah.
um, if it's categorized as um, a holding company for a property, that would be a little bit
Mhm.
harder to get approved for a high limit card unless it's
Okay.
categorized as property management.
Okay.
That would be a good way to go if it was. And basically, where it's categorized is on the bank account and on potentially the Secretary of State and potentially your business credit bureaus like Dun and Bradstreet and Experience Small
Yeah.
Business. It's an easy change
Okay.
if you did want to, but
Okay.
if it was real estate holding entity and consulting business, the consulting business is going to be a lower risk nature of business. So that
Okay.
would be a better industry to get the credit on consulting.
Okay. So then I should apply for the consulting and not even worry about the real estate
Yes.
potentially. Yeah. Okay.
Yeah, just based on the lower risk.
Okay. All right. Got it. Thank you.
So
Cool.
Jack,
Yeah,
if
you got it.
someone wants to work with you and you do it as a done for you, do you mind to pop the link to a strategy call, anything that you provide?
Yeah, for sure. I'll drop that right now.
So guys, if anyone is based in US and you guys looking to get some fun for your business, so as a done for you, you can't be bothered with, learning and all of that things that go through it. You just can go to Jack and Jack can get it done as a done for you service for you guys.
Yeah, I'm
Oh,
going to drop this right here. A social security number or an ITIN number is required. I also drop my Instagram there if you guys care to shoot me a follow. So an EIN number is required, but also the social security number or the ITIN. So you build a personal credit profile on a social, an SSN or an ITIN. And then in addition to that, you'll need to have a business entity, which is associated with that EIN. So you need an SSN or ITIN and an EIN.
all right, perfect. So one of the question is, when you say to build the relationships with those bank or credit card company, does it mean that open the business account or personal account? And how much do you put in?
Yeah, great question. So we talked about building a banking relationship at some banks and a credit relationship at some banks as well. At Chase and Bank of America, those are going to be the two most important ones to build a banking relationship at. And what I mean by that is opening a business checking account and doing some of your business operations in that business checking account at one or both of those two banks, Chase and Bank of America. Or actually not or, but kind of and, more so like an and, is you can build a credit relationship with them as well. Potentially getting a Bank of America personal credit card, a Chase personal credit card I recommend, and then at American Express, where they really don't have like legit bank accounts, really the best way to build a relationship with American Express is through some of their credit cards. Like the Amex Business Gold is an easy one to build that with.
Perfect. There is a couple of members saying that they're not based in US, but they're really interested. Do you know any hacks or tricks that they are able to get a SSN or ITIN without actually living there?
Yeah, let me drop my my friend's Instagram. Let me find that real quick. His name is Chris Gursky. He's a German guy, and he actually specializes in helping foreigners get access to American funding. So that'd be a perfect person to refer. His Instagram is the Credit Genius. Let me find him real quick. Here we go. Cool. So if you are a foreigner and you still need access to building credit in the States, in that scenario, I would refer to Chris, my friend, the Credit Genius. If you're a foreigner and you need to get access, that's where I would recommend you.
So the link to the Chris's profile is in the chat, so you guys can follow. You could take a screenshot of the Jack and say Jack recommended in the Atena's Mastermind. So
Yep.
it would answer to you guys. All right, so Pete, you're next.
Yeah, okay, very good. Finished my meal, so I'm back on camera. And so I have a question really. What boils down to whether I should focus on getting new personal cards or a new business card. So my FICO score is excellent. I did start a business credit some time ago and got stupid lines of credit for a paper, like you're supposed to build your credit by using it to buy office supplies and all that. So I've been both of my credit histories are good. Would you focus more on getting new business cards or new personal cards for these business loans?
So business credit cards don't exactly build your credit score. So the most important thing is making sure your personal credit profile is as strong as possible. So really where I first look at is how many personal credit cards does someone have and what are the collective limits on those cards? Do you know those two numbers by chance if you want to share?
My FICO score or what?
Yeah, like how
Or
many
how many
personal
cards I have?
credit cards do you have? And if you add up your personal credit limits, what does that come to?
I have about 10 cards and the personal credit limit. I was just doing that while we were on the call. It's probably in the 200K range and an
Okay.
839 score.
Cool. So great score. You have a bunch of accounts. I think, when you have that many accounts, it helps with a really good score. In terms of that collective credit limit of that 200K, sometimes, and I've really only seen this happen at Chase Bank, but sometimes people won't get approved for a Chase business credit card with a good limit because of too much personal credit exposure. And that's after that over 100,000 collectively, that's where I start to see that denial reason. So if I was in that situation, I would actually manually reduce some of my personal credit limits on some of the cards that I don't use. So you're going to get closer to that 100K. Ideally, just below it is what I personally do and recommend to people that I work with.
Okay, that's good. All right, great. All right. And I appreciate what you said about Truist and Citizens, because I'm based in Florida, so that will be helpful. You said that those are good banks to reach out to.
Yep, perfect. Truist is easier than Citizens. Citizens sometimes ask for bank statements, but Truist I've never seen to do that. And I would just do an application at Truist over the phone. And basically, there's a different approach for the application on a bank by bank basis. Sometimes we want to apply through relationship managers. Sometimes we do online applications, and sometimes we do over the phone applications. Truist would be one to do over the phone, and you can apply for both of their credit cards And it really helps if you have two businesses to do one card per business. But Truist is definitely a great lender.
Okay. And I'm going to go in and talk to find a relationship manager at Chase next week. So thank you for that too.
Perfect.
Cool.
Very
Appreciate
good.
it. And I reached out to you on links and Instagram. So we're all set. Thank you, Atena, for inviting Jack. And thank you, Jack, for your great insights.
Cool.
No,
My pleasure.
thank you so much again, Jack, for your time. Really appreciate it. And especially, what time is it then now?
It's approaching midnight.
Oh no, we really
I'm
appreciate
I'm used to it. I've
it.
been over here for a week, so it's I'll be wrapping up the day soon, but I'm on a late schedule.
Yeah, I really appreciate that you're staying up for this masterclass, and you know that I know you charge so much for the coaching, and then you're doing us a favor and doing an amazing presentation. Really appreciate it again. So guys, if you want to follow Jack, so Jack popped a link to his Instagram. I also did that earlier. Make sure you follow him if you wanted to get the credit financing as a done for you service. You can also touch base with him, and he take care of that. I just have one last question, Jack. So
Yes.
do you know about the split it?
Split it.
Yeah.
Refresh me.
So split it is what we got ourselves. It's a credit financing option that is international. It's not just US based, it's international, and it's based on the credit card limit, and you can get up to 65,000 instant approval. So we got it ourselves 2 or 3 weeks ago, and we've seen a massive difference in our revenue because everyone that couldn't afford it know they can get 65,000 through the split it, and no matter where they are. And it's not based on the credit score, just the credit card limit. I wonder if you heard of it.
No, maybe I've heard of it, but I mean those are pretty big limits for someone to get approved for sure. 65K. I know we have a few different buy now, pay later options that have really helped boost revenue, just to get more people to afford the certain offers that we have. But split it sounds pretty cool.
Yeah, it's not that you can go get a fund and cash and do whatever you want. You need to purchase something. So for example, if you're going to purchase a coaching program that is 20K, then you can just pay that through the split it if that option available. It's not like you can get the cash and then decide what you want to do. That's the difference. But it's pretty new. But then as a seller, your dispute rate has to be under 1% for the last 3 months to be able to get approved for it. It just they're very strict on the sellers.
Okay, split it. I'll keep that in mind for sure. We'll look into that.
Yeah, no worries. All right. Thank you so much again, everyone. And we'll see you next week. Thanks again, Jack. Have a great day.
Awesome. Thank you
Right
guys.
now.
Take care.
Cheers.
Bye.
Bye.